So, this week's topics, Ringgit gains. Yeah, we will talk about the Malaysian Ringgit. It has closed the week at 4.66, and also a bit about the US dollar, right? Why has the US dollar suddenly weakened? Next, we will move on over to tax reliefs. Some of you guys may be confused on the claiming of the tax reliefs. Okay, so for year assessment 2023, you guys have about less than 2 weeks left to maximize your remaining tax reliefs. So we'll talk about what are the most common things that you can maximize and more in our weekly analysis as usual, not financial or legal advice. Let's dive straight in. This is the US dollar versus Malaysian Ringgit chart. The Ringgit has fared, I would say, decently well this week. Okay, closed Friday at 4.6675. Started the week at the wrong foot, okay, depreciated to 4.71. But compared to 2 months ago, to its 25-year low of 4.7926 back in October, the Ringgit is now up about 2.60%. So this is a bit of a positive news for us Malaysians, I guess. It's much better than, continuing to depreciate above 4.8 or even 4.85. MIDF, this research firm, is still very head-on, very positive on the local note, ending at 4.30 by year end. Looking at it, we only have about 2 weeks left. This seems like a bit of a far stretch, but it's not out of the window. We may see just the ringgit strengthen to this region early next year, or perhaps by the first half of next year. Now, the reason why we are seeing such a weakness in the USD-NYR pair, or perhaps the weakness in the US dollar itself, well, you just take a look at the dollar index. This week, the dollar has fallen quite significantly, 1.5 to 2.0% in the past 2 to 3 days, translating to a similar weakness in the USD-NYR pair. So it's safe to say that the entire reason why we are seeing the strength of the ringgit right now is mainly due to the weakness in the US dollar. And why did the US dollar suddenly fall this week? Well, that's because of the Federal Reserve. On Wednesday, they had their final FOMC meeting for the entire year. Now, normally the Federal Reserve, they hold meetings every 1.5 months to decide on interest rate hikes, whether or not to pause, hike, or to reduce interest rates. And they will also give forecasts on the current economy. So on Wednesday itself, the Federal Reserve has paused interest rate hikes, and then they signaled rate cuts in March. So this is basically a huge shift in tone, because previously, all the previous meeting from the Federal Reserve, right, never had they mentioned any rate cuts, or perhaps any inflation coming down steadily, it's going to our target goal. Always they mention that, we will increase interest rates if necessary. But this meeting itself on Wednesday, first of all, rates were kept at 5.25 to 5.0%. It is the third consecutive pause. Secondly, Jerome Powell, the chairman of the Federal Reserve, he said that further rate hikes are not likely. Now, if you are wondering how currencies work, why currencies fluctuate, right, it's mainly due to interest rates. The entire reason why the US dollar rallied so significantly in 2021 to 2022 is because of the Federal Reserve continuously hiking interest rates. And then they also said that more rate hikes may be necessary. Now, they are saying the reverse. They say rate hikes are probably no longer likely. We are also looking to reduce interest rates next year. A recession is not needed for rate cuts. 1 year ago, this meeting would have been totally different. Jerome Powell would have said that a recession is still probable. We are looking to continuously increase interest rates. Okay, rates must stay higher than longer than expected. Inflation will not come down at a linear path. And rates to be slashed, this one is by the committee, by 75 basis points in 2024 in a series of 3 rate cuts. And the market itself, they are pricing in twice the number of rate cuts in 2024, 150 basis points next year. And the result of this meeting, you'll be able to see, like I showed you guys just now, since Wednesday, the dollar fell 1.5 to 2.0%, translating into strength in the Malaysian ringgit. And next up, what are the things that we saw also is the global markets, they rallied, especially the US market. So this is the S&P 500 index. Since Wednesday, within the same time frame, rallied by 2 to 3%, similarly to all the major US market indices, the Dow Jones as well as the Nasdaq. And this you can read here, right? Federal Reserve, they have triggered a market rally because they have signaled interest rate cuts in 2024. Now, apart from the US market rallying, we are also seeing recovery across global markets. Generally across the board, the Malaysian market has piggybacked along the US market's recovery as well. The FBMKLCI since Wednesday is currently up 1 to 2%, led by major banking stocks such as CIMB and Public Bank. These two banks are up 1 to 2% in a similar time frame. So right now the question that you might have is, the Federal Reserve, they have looked to reduce interest rates, they are pretty much done hiking interest rates already. Will this rally continue in 2024? Because we are already seeing it right now. On a year-to-date basis, the S&P is up 22.2%. So I decided to direct these questions to the financial experts, Mr. Sunny Hamid and Han Liu. And Mr. Sunny is an economist, 30 years of financial experience. He said that, I think the start of 2024 will see positive momentum follow through. So basically, the rally is expected to sort of continue, definitely not after a slight retracement, okay? The market is currently very heavily allocated into cash and bonds, despite the S&P rallying by 22.2% this year. So we may see some reallocation into risky assets. Now this statement, although short, can give you kind of a good idea what the 2024 outlook, first half of the year at least, is going to be like. Okay, so if you're ever considering to readjust your investment strategy, next year may just be a good time to allocate your less risky assets into more riskier assets such as shares, stocks, US equities, or perhaps maybe a little bit of crypto. Now let's talk about tax reliefs. To utilize our personal tax relief next year, must we get all of that done by 2023? This includes medical checkup, lifestyle, etc. Well, the answer to this is yes. Okay, the tax relief for the assessment year of 2023 only applies to this year. Okay, which means that you guys have less than 2 weeks to maximize your remaining tax reliefs. So just tonight, do a quick Google search on Pelepasan Cukai 2023. You'll be able to find the full list of tax reliefs and make sure you don't miss out on those notable ones. The first one being lifestyle reliefs. This one is basically the most common one, 2,500 ringgit. And it includes reading materials, any type of reading materials. As long as it's not offensive or banned, you can basically include it in this relief. And it also includes e-books. So let's say you bought some e-books from Kindle or maybe Shopee, you bought those copies of those books, right? You'll be able to claim it under this relief for yourself, your spouse, and your children. Okay, next up is personal computers, the telephones, as well as tablets. As long as they are not for business purposes, you can claim under this relief. Again, for your spouse, children, yourself as well. The third one is the internet bills as well as phone bills. This one has to be under your own name. And finally, pembelian peralatan sukan, which is gym and sports equipment. Again, this one can be claimed for your spouse and children as well, up to 2,500 ringgit. So as much as possible, throughout the entire year, definitely you guys will have purchased some of these items. Make sure you store the receipts properly and claim it within this relief next year. The next question is, do I need to submit receipts when I file for tax reliefs? Well, actually you don't have to. In the tax form itself, you can just basically include any relief that you are entitled to, as long as you have the evidence to it. Okay, you can see over here, taxpayers are required to keep sufficient records for a period of 7 years from the end of the year to which income from the business relates as provided under paragraph yada yada yada. So basically, whatever receipts, invoices or evidence to your purchase, it must be kept nicely up to 7 years. Now I understand that receipts, you keep it in your wallet for 1 week, the ink starts to fade, it starts to disintegrate already. So as much as possible, first of all, you want to store it in like a A4 file or something like that, a plastic file, and then make a soft copy of it. And make sure you have a digital and physical copy of your receipts so that in case you get audited within this 7-year period, you have sufficient evidence. One of the things that you guys must take note, failure to provide any sufficient evidence during an audit will result in a 15 to 45% penalty. So make sure you guys keep all of your receipts, even though it may not be related to some of the tax reliefs, just to be safe. I decided to do up a chart of all or most of the Malaysian banks and their year-to-date performances plus their 2023 dividends. So Maybank, currently the share price is up 4.23% and it has given a dividend of 6.52%. So if you invested 1,000 ringgit in January, your portfolio will be currently up, or particularly your Maybank portfolio will be up by 10 to 11% right now. So Public Bank 2023 dividend is 3.26%, CIMB 5.25%, the list continues. And this last one over here may have caught your eye. MBSB is up 14.57% on year-to-date basis. It has given an 11.20% dividend. If you invested in MBSB at the start of the year, you'll be up 25 to 26% right now. Now, some of you may be wondering, oh, is it too late to invest in MBSB? You may be getting a bit excited. Well, the truth is you got to check the historical performance of this bank itself. Okay, so MBSB, since its all-time high of 2.80 in 2013, it's currently down 72%, even though it's up, 14 to 15% on a year-to-date basis. So don't get fooled by the year-to-date performance. Sometimes they tend to do it when they want you to buy a certain product or a certain fund. Make sure you track back into their historical records. Take a look at their historical records, see their historical performances. And the other important question about banks itself, if you're interested to invest, is to ask whether the dividend payouts are consistent or not. Now, in the case of MBSB, right, this year's dividend is definitely sky high, 11.20%. But if you take a look at their history of payouts, last year, MBSB actually didn't pay out any dividends. And the previous year, MBSB paid out 40 to 50% less dividends compared to this year. Now, compared to other banks such as Maybank, Polybank, and CIMB, these major banks, every 6 months, they tend to pay out quite good dividends now. Okay, so Maybank in March they pay out one dividend, and then in September they pay out another dividend again, adds up to be about 6.52%. So this is the main reason why investors, they will normally opt for major banking stocks. So just a quick shout out to all our current members: Andrew, Wendy, Edward, Alex, Sissy, Irshad, Caveman, Balls, Calvin, Tommy, Jinkang, Adrian, Jazz, Wenyan, Dean, Duhan, Faris, Alan, Jackson, Raizan, Hudson, G, Jeffrey, Lawrence, Lukman, and our learner members as well. So we got a question over here. Does the voluntary contribution to EPF, does the tax relief to EPF cover voluntary and mandatory contributions? Now, the first thing that you need to know about the tax reliefs for EPF contribution is it's up to 7,000 ringgit. Okay, and the first 4,000 ringgit covers both mandatory and voluntary contributions. Which, by the way, as long as your wage is above the minimum wage, you're most guaranteed to receive this 4,000 ringgit tax relief already through mandatory contributions. Now, the other question is, let's say if you voluntarily contributed to EPF, okay, you'll be entitled to an additional 3,000 ringgit tax relief. Because you can see over here, I'm not sure if you guys can read it, just let me quickly paste it over here and zoom it for you guys to see. Okay. Yeah, so right over here. So you guys can see, right? First 4,000 ringgit is actually limited to employer/employee contribution, also inclusive of your voluntary contributions. There is an additional 3,000 ringgit on top of that, which is specifically catered towards life insurances or takafu for family or voluntary contributions to EPF. So if you're looking to really maximize your tax reliefs, you've already utilized your PRS, there is a remaining 3,000 ringgit to voluntarily contribute to EPF. Hopefully that helps you to clarify some of the questions and doubts. I hope you guys enjoyed it. I'll see you guys in the next one. Bye guys. Stay safe.